Welcome to Money Stories, where we dive into the biggest money stories, the wins, the losses, and the lessons you won't hear anywhere else. Ready to learn from real finance drama? Let's get started. In the spring of 2021, Mark felt unstoppable. Every investment he touched seemed to turn into profit. Stocks were going up. Crypto was exploding. Social media was full of screenshots showing overnight millionaires. And Mark believed he had finally cracked the code. He wasn't a finance expert. He didn't work on Wall Street. He was just a regular guy who started investing during a market boom. At first, he was careful. Small amounts, safe companies, slow gains. Then the wins started stacking up. A few $100s became a few thousand. A few thousand became tens of thousands. And that's when the mistake began. Mark stopped asking, what could go wrong? He started asking, how much more can I make? Everyone around him was talking about one thing: leverage. Leverage meant borrowing money to invest more than you actually had. It sounded dangerous at first, but online people explained it like a shortcut. Smart investors use leverage, they said. It's how you scale faster. Mark watched video after video, read thread after thread. The message was always the same. If you believe in your investment, why not go all in? So he did. He took his savings of nearly $80,000 and used leverage to multiply his position. On paper, it looked brilliant. Small price moves now meant huge gains. Every green day felt like proof he was right. Mark started checking prices every hour, then every minute. At night, he couldn't sleep. Not because he was scared, but because he was excited. He imagined paying off his house, quitting his job, telling people he made it. But markets don't care about confidence. One morning, Mark woke up to bad news. Nothing dramatic, no crash. Just a small drop, 2%. Normally, that would mean nothing, but with leverage, it meant everything. His account balance dropped fast. Mark told himself it was temporary. Markets always bounce back, he thought. He'd heard that phrase 100 times, so instead of reducing risk, he did the opposite. He added more money. This time, the market didn't bounce. Another drop followed, then another. Panic started creeping in. Mark refreshed his screen over and over, hoping the numbers would reverse. They didn't. Then it happened. The message every leveraged investor fears. A margin call. The platform demanded more money to keep his position open. If he didn't add funds immediately, his investments would be liquidated automatically. Mark didn't have more money. Within minutes, years of savings disappeared. Not slowly, not gently. Gone in a single forced sell. Just like that, it was over. The market eventually recovered weeks later. The prices Mark believed in went back up. Some even hit new highs, but Mark wasn't there to see it. He had been wiped out at the bottom. The worst part wasn't the money, it was the realization. Mark didn't lose because he picked the wrong investment. He lost because he ignored risk. Leverage amplified everything, including his mistakes. A small move became catastrophic. Confidence became overconfidence, and patience disappeared when it mattered most. For months, Mark avoided looking at markets. He avoided conversations about investing. The shame was heavy. He kept replaying the same thought in his head. If I had just slowed down. Over time, he started rebuilding. Smaller amounts, no leverage, clear rules. He learned something that most investors only understand after losing money. Survival comes before profit. The market will always offer opportunities. There will always be another stock, another trend, another boom. But once you're wiped out, you can't participate anymore. The real mistake wasn't investing. The mistake was believing he couldn't lose. And that's the lesson hidden inside many financial disasters. Not greed, not bad luck, but the quiet belief that this time is different. It rarely is. If there's one thing Mark wishes he had understood earlier, it's this. Making money is optional. Managing risk is not. Because in investing, staying in the game is the only way to win. That's where today's story ends. I hope you found it valuable. This story is a fictionalized scenario created for educational purposes, inspired by real investing behaviors and market events. If you want more lessons hidden inside money stories like this, subscribe.